So very good afternoon. In the previous class we have seen common size balance sheet, and in today's class we'll go with the next financial statement, that is common size profit and loss account. So common size profit and loss account. First we'll go over the pro forma. And how do we come out? So it is profit and loss account of dash company for the year ended, dash and dash. Then you have particulars, you have note number, you have current year, you have amount here and percentage here. You'll have previous year data, you have amount here and you have percentage here. Now, because we are looking at a profit and loss account, in the particulars column, what do we write? We write the pro forma of profit and loss account. So the first part in here is called as revenue. Under this we have two things: revenue from operations and other income. That's how you will get total revenue. Second part, you have expenses. So under that, first you have cost of material consumed. Next you have stock in trade purchased. Next you have change in inventory. Then you have employee benefit expenses. Then you have financial expenses. Next you have other expenses, and last is depreciation. This will give us total expenses. Now third, it is called profit before tax. How do you get this? Total revenue minus total expense gives profit before tax. Fourth, minus tax will give you profit after tax. So that's the pro forma of profit and loss account. In revenue we have two subheads: revenue from operations and other income. In expenses, these are the subheads we categorized into three sets. Like this is the first set where we take is cost of material consumed, stock in trade purchased, change in inventory. Next set we see employee expenses, financial expense, other expenses, last depreciation. Revenue minus expense gives you profit before tax, minus tax will give you profit after tax. So this is the pro forma of profit and loss account. And here you take current year and previous year, you take amount and percentage, So because this being a common size statement, so two possibilities are there. One is you take one company, say ABC company, you take the data for two different years, that is current year and previous year, and you can compare it. Such comparison is called as what? Inter-period comparison. Inter-period comparison, because you are comparing the profit and loss account for two different time periods. Similarly, you can take the current year data only. You can take two different companies, ABC company and XYZ company, and you can compare the data. And here this is called as inter-firm comparison. Inter-firm comparison. You are comparing the profit and loss account of two different companies for the current year. So this is called inter-firm comparison. So these both are now possible in common size statement. Apart from that, now what is the common base? Common base at profit and loss account. The common basic profit and loss account we already understood as sale. Sales is after minus sales return. So it is sales minus sale return. So whatever sale you take here, it is sales minus sales return. So usually they call this as net sales. So gross sales minus sales return will give the net sales. Let us avoid the technicalities. So whenever we are talking about sale, we will take it after deducting sales from sales return. So particulars column we fill in the pro forma, we are aware of it. Amount columns, the amounts are given at the problem, so this should not be a problem. The only thing is percentage. So how do you calculate the percentage column? It is individual transaction divided by sales into 100. When I talk about sales, I am always saying it as sales is sales minus sales return. So this is how you calculate the percentage. So this is the basis for doing the problem. We saw the pro forma and we said here that two things are possible. Inter-period comparison and inter-firm comparison is possible. And because it's a common size statement, it is a common size profit and loss account. So common. So when we are talking about a common base, so the common base of profit and loss account is sales, and particulars pro forma we are aware of it. Amounts are given in the problem. We calculate percentage as individual transaction by sales into 100. This is how we calculate the percentage. So having understood this, now let us take up a problem and solve it. Understand this concept of comparative common size profit and loss account. We are going to problem number 8. So take your worksheet, come to problem number 8, or hold a pencil and come forward. Prepare a common size statement of profit and loss account from the following. So he is asking to prepare a common size profit and loss account. Revenue from operations, market, it is revenue from operations, RFO. Other income, it is other income, market as OI. Financial cost, it is nothing but financial expense, market as FE. Other expense, directly given, it is other expense, market as OE. Income tax, market as minus tax. Having marked this, now come to the dates. 31/1/2012, market as PY, previous year. 31/3/2013, 2002 is previous year. 31/3/2003, that will be the current year. So now he is asking us to solve this. So we are looking at solution to problem number 8. Solution to problem number 8. So we are looking at this profit and loss account of dash company. He is not given the name of the company. For the year ended. First we are taking the year. Okay, he gave the previous year first. We'll take it accordingly. So first you're taking previous year, then you're taking the current year. So for the year ended, so 31/3/2012 and 31/3/2013. So yeah, you're taking the previous year and current year, amount percentage and amount percentage. So I put out the entire pro forma as it is. In exam you are not supposed to do this. You are only going to put those transactions for which are given at the problem. But in the class, please put on the entire pro forma. It becomes a practice. Now with this, we are going down with the problems. So revenue from operations. So here it is, revenue from operations. For the previous year, it is 42 lakhs. For the current year, it is 40 lakhs. Next, other income. Here it is. For the previous year, it is 25,200. it is 25,200. For the current year, it is 30,000. Next, we are going for finance cost, that is financial expenses. Here it is. For the previous, it is 26 lakhs, 88,000. It is 26 lakhs, 88,000. For the current year, it is 24 lakhs. Next, we are going for other expenses. Here it is other expenses. For the previous year, it is 1,51,200. For the current year, it is 1,60,000. It is 1,60,000. Income tax, so minus tax, write it at the rate of 40%. When we come to this, we'll look at the tax. So with this, now we have to start taking the totals. The total for the first thing is 42,25,200. The total for the next thing is 28,39,200. Similarly, we'll go for the current year. The total is here 40,30,000. Here it is 25,60,000. So we have taken the totals. Now come to the previous year. This is total revenue. Total revenue minus total expense will give us what? Profit before tax. So 42,25,200 minus 28,39,200 will give 13,86,000. So profit before tax here is 13,86,000, and we are going forward. 40,30,000 is total revenue minus total expense 25,60,000. So the profit would be 14,70,000. 14,70,000. Now we have to reduce tax at the rate of 40%. So how do you calculate 40%? How do you calculate tax? So income tax is equal to profit before tax into 40%. Now come for the previous year. It is the profit before tax is here 13,86,000 into 40 by 100. For the current year, it is the profit before taxes 14,70,000 into 40 by 100. So you have to calculate accordingly like this. And for the previous year, it is 5,54,400. And for the current year, it is 5,88,000. So come back here, take the values there. So it is minus 5,54,400, negative figure I am putting in bracket. And here it is minus 5,88,000, negative value, therefore I am putting in bracket. So profit before tax minus tax will give us what? Profit after tax. So for the first case, it is 8,31,600 here. So profit before tax minus tax will give profit after tax. In the second case, the profit is 8,82,000. 8,82,000. So usually when you're doing the problem, first we have to fill in only the amount columns. Don't go to the percentage column. Just fill only the amount columns. Now we go to the percentage column. Now I'll just show you for certain transactions how do you calculate the percentage. That is individual transaction divided by base, that is sales, into 100. So individual transaction of the previous year divided by sales of previous year into 100. So you calculate it like this.